Pancakes or waffles?
But
So I'm taking on the big guy. We're gonna talk about Tesla. Now this is chill channel, okay? No edits or anything like that. No flashy boom boom stuff. So just sit back, relax. We're gonna look at some charts and figure out if we can form some opinions around this company here. Now I used to really dislike Tesla because the company, and I used to like the cars, but that hold on, my mic's a little hot here. But that has flip flopped a little bit. So now I'm more fond of the company and less fond of the car itself, which is an interesting dynamic. So I'm going to use stockanalysis.com, which is probably my favorite website now to kind of do a quick overview of a company. And we're going to take a look and see if we can compare Tesla to some of the other companies that, okay, 1 second. Need to switch this. There we go. I'm going to compare Tesla to some other car companies. They do make cars, right? I know that they make other stuff. I mean, they have like software and stuff like that. And they have an edge on other car companies that, you know, deserves a higher valuation. But after we get done with all these charts, we're going to see if that's fair or not and see if I can put my own little valuation on the company. So it's trading at $663.9 per share today. It is May 20th. And it looks like the market capitalization of the company is 687.81 billion. Revenue is 62 billion roughly, and net income is 8.4 billion roughly. So that's already kind of overrated, overvalued. Usually you want the revenue of a company like that, like a car company, to at least match the market capitalization. But there's an expectation, since this is a growth company and a massively huge growth company, there's an expectation that that revenue will go 10x from here, based on market valuations at least. Now, it's already experienced kind of a meteoric rise. When I go to the income statements here and the bar charts, they show a massive increase in revenue, which is very good for a growth company. The revenue growth year over year is actually increasing in the last 3 years, which is incredible. So it's a very, very massive improvement. Normally companies decrease the rate of growth, right, as they get bigger and bigger. This one's actually increasing yearly. And you can see the revenue. This is by quarter. Let me see if you can see it well. I think you can. This is by quarter. Revenue growth. Look at that, 81% in the last quarter, year over year. That's insane. So another metric I like to look at is operating income, and it's been positive for like the last 3 years, each quarter. In fact, they had their best quarter recently apparently, and this graph looks pretty exponential as well. So Tesla definitely making good so far on the promises to its investors that it's going to experience a really, really massive growth. But is it worth that valuation though? I mean, it was valued, I think, over $1 trillion. Now it's a little more reasonable, but is it reasonable enough? You know, that's a good question to have. I'm going to try to answer that. So another metric I like to look at with growth companies is shares outstanding. So they actually have increased their share count, which means they're diluting the shares at a rate of around 5%, you know, something like that. So it's not horrible. I like to compare it to the revenue gained, and certainly the revenue is more than doubled since 2012, right? So if I go here, since 2012, the revenue was like, I don't know how many million or billion, like less than $1 billion, and now quarterly revenue is 18 billion. Right? So it went more than 18x versus only 2x increase in shares. So more than justified. other people use other metrics. I like to look at that one. If we go to the statistics, we'll find out that the market cap is actually bigger than the enterprise value, which means they are holding some cash. They're holding some cash. For a more detailed look into their cash, you can click here, full income statement. I'm sorry, you can look at the balance sheet here, full balance sheet. You can click on this link, or you can just go to the sec.gov and look at their filings. So their P is very, very high at the moment, 89.72, and 4P is a little bit lower. So they're expected to have even better quarters and years in the years ahead, which is reasonable to expect given this kind of like exponential growth, even through difficult times, might I add. Not only in the car industry, but in every industry, period, in almost every country. So, but still, we would need this revenue to 10x. And how big can this company realistically get to? We're talking, it needs to be 3 times bigger than a company like Toyota, for example. So Toyota's market capitalization, I think, is the second biggest car company in the world, is 219 billion at the moment. And it does not have growing revenue, right? But very, very small, barely growing. If you look at the quarterly level, this is the revenue chart here. It's barely growing. We can look at operating income. We can look at shares outstanding. I'm not seeing it. Oh, there it is. Shares outstanding. So they're actually buying back shares because they think they're overvalued. So if you're holding a share of Toyota right now, since they're buying back shares, you're owning a bigger percentage of the company as time goes on. So that's nice. They're returning cash back to investors. And it looks like they have a dividend growth of 7.26%, an annual dividend of $2.10, translating to 1.32 dividend yield percentage. And it looks like, well, it's fairly random, but fairly consistent too. It's about, between $1 and $2 ever since 2012. So it's fairly predictable. So this company, if we go to the overview, you'll see that the revenue here is 257 billion, corresponding with a 219 billion market cap. But Tesla, go to the overview, it has a market cap of 687 to 62. And even less than that is only $8 billion of income at the moment. It was zero up until like a couple years ago. So it's growing, but we don't know exactly at what stage of growth it is. I'm betting that it's gonna plateau in the next 2 to 3 years, but we'll see. I could be wrong. There could be other avenues of growing revenues. So if we look at Toyota, they're actually making 3 times as much profit. Toyota makes 3 times as much money than Tesla right now, and it revenues 4 times more revenue. 4 times more revenue than Tesla, and 1/3 of the valuation, right? So yes, Toyota's mature, and even though it's innovating and trying to keep up with trends and everything, it's treading water, right? It's staying about the same market share of the car market, roughly, maybe decrease a little bit now, but the revenue is growing ever so slightly, and so are the profits. But we're talking like 1/3 the valuation, 4 times the revenue, 3 times the profit of Tesla right now. The reason I mentioned this is because this is what a mature company looks like, right? So this is what we can expect from Tesla. If Tesla becomes the market leader of amount of cars that people around the world use. So if the amount of people around the world drove Teslas was the same as Toyota now, so Tesla has the same market share as Toyota, this is what we can expect. This is if they're number one. So a 600 billion-dollar valuation, 687 billion, so more than triple, right? What that's basically saying is that currently what's priced in to the market is that Tesla is going to have 3 times the amount of customers than Toyota currently does. That's taken out all of the, options that you could be upselling to your customers, like self-driving or whatever else Tesla decides to sell. But even if we take that into account, it has to account for triple the amount of money that people spend on the actual car. I mean, that's a very, very, very large number. So we're talking like more than a Model T revolution here that's currently priced in. And $1 trillion, I mean, like I said, even if it's the market leader, it would have to sell like 5 times. For every one Toyota customer we have now today driving a Toyota, would have to have 5 Tesla drivers. I really like the company, right? It's it's growing extremely large, but it has to be a complete and utter annihilator of every single other automotive company and automotive product around the world. Could it happen? I mean, sure, everything's possible, but I don't think it's very likely at all. I think good valuation for Tesla would be, that 200, because I think it has a very good shot of being the market leader around the world. I think that 200,000 billion mark is good relative to Toyota, and then maybe add in another 50 billion to 100 billion for upselling other Tesla products and things like that. Factoring in the batteries or whatever else they decide to make in any kind of expansion. You could bet on the future, and you could put some extra valuation there saying like, okay, well, they're going to come up with other products, not just cars, not just batteries and not just flamethrowers, but they're going to have other Tesla stuff, maybe some kind of other technology and things like that. And I want to own the Tesla now before it blows up. Fine. Maybe add another, say 100 billion. So that brings us up to 350 billion. And that's an optimistic scenario. At the current valuation of almost $700 billion market cap, that puts us at double that. So I think Tesla deserves to be somewhere around the $300 range here per share. I really like the company, not the cars. I like the technology. I like the company. I like everything else. But I think this growth is very, very overpaid for. I think the scenario that it's shooting for is a bit unrealistic. It cannot be that dominant of a market leader. The competition would be absolutely insane. I mean, yes, there's only one Elon Musk out there, and it's unlikely that there are a bunch of geniuses just like Elon Musk, but he's going to have so much competition. And in fact, many of the traditional car makers are making electric cars, and they're implementing some of the stuff. They're biting off of what Tesla's doing. They have like online shops and things like that, and they're cutting costs, and they're copying some of the innovations, and there's going to be so much competition out there for Teslas. I doubt they're going to have 4 or 5 times the amount of cars out there that Toyota does. And or if they have half of that, they'd have to have twice the profitability of the Toyota. They have to be extremely efficient, right, in order to make that happen. So there's not just one way to skin the cat, but pricing that in now and having to wait 3 or 4 years for that to materialize just to stay at the same market cap is a bit not for my taste. Okay, but like I said, there are scenarios where they could keep innovating and adding on things. I mean, look at a company like Amazon, for example. At first, they just started selling books. And, okay, well, what's the max market cap that you could put on that company? Not a lot, right? I mean, even if they dominate the entire world book market out there, it can't be that big of a company because there just aren't that many books. I mean, they have to make books the number one most popular product, etc. But then started selling other products, and not just other products. It started selling almost all products, right? They developed, partnerships. They started selling ads, so that put that on there. They started doing AWS, right? They have server business, which is very extremely profitable. So they expanded in other ways that perhaps traditional investors in the beginning didn't account for. And same thing could happen at Tesla. I mean, that is kind of the model for big businesses nowadays. But I think that that's going to be many, many years ahead. And like, how many years do you have to wait for that to materialize? And you're just kind of making a bet on the person and the company culture that they can pull this off. Okay. I mean, like, if you really believe in it, you think that's gonna happen, that's fair, that's fine. But if you just stick to the businesses they have that right now, it's quite a bit overvalued. So I guess that's why the price is fluctuating so much, is because it's a bit of a tug of war between people who value it based on a car company and people who value it based on kind of like an Amazonish, continual innovator, or like maybe even Apple, although nothing's been as big as the iPhone. They still introduce new products to the lineup, and they upsell their customers. They have the services business, they have the iPads and the earbuds or whatever. So they keep bringing new products, and I heard they're going to do the glasses now. Who knows if that's going to be done right or not? But it's feasible. It's possible for them to grow in such a way. It's just too big of a gamble, like for someone like me. So I would say if the company was around 200 billion or even 250 billion market cap, then I can see myself perhaps being interested. But at 700 billion market cap, I think it's just too rich for my taste. So that's my opinion on the big T. And I wish the company best of luck, and it's doing amazing things right now. So hopefully it continues to do so in the future. But that's my opinion. All right, let me know if you own some Teslas and what you got on this company. All right, peace.